Hello everyone, welcome to this week's edition of the Fibonacci Review, the first for 2025. And today I'm looking at the Dow Jones Index, of course the top 30 stocks in the world's largest economy in the US. Now the Fibonacci series, or the retracement tool, is based on nature's harmonic code. It's a very simple code, a very easy code. It's in all things, plants, animals, astronomy, you name it. You'll see this code and these numbers working repeatedly as a building block or a measurement. Now we can do the same thing in the stock market, and looking at this weekly chart, the first thing that I'm going to do is to go into my tools up through here. I'm going to bring the Fibonacci retracement tool and launch it from that major low, the COVID panic low of March 2020. And we're going to bring it up to the next peak, which occurred here the first week of January 2022. And what we're simply doing is taking the range or the distance from that low to that top and dividing it by the Fibonacci ratios. Now these are 23.6, 38.2, 61.8, 76.4. I've also included the 50%, not a Fibonacci ratio, but one that W.D. Gam warned us was very, very powerful in market moves. So I've included that. And now all I simply need to do is to, once the market confirms that it's in a downtrend here by breaking through the previous support lows, then I can just move this tool across to the right-hand side. And that tool will sit in place until either that top is passed or that low is passed. Now, the reason that we do that should become very obvious very, very quickly, because you can see through here that in December of 2022, the Dow sat at the 23.6% level, around 32.5. Very quick false break, back again here in June 2023, again here, October 2023. In other words, the index and the stocks underlying the index were getting very good support around this 32.5 mark. And the big traders, the big gun traders with the millions and millions of dollars to invest, knew that this was a support or resistance level. And as you can see from that point, it went through a very strong rally. The low through here at 32.5, and it's been as high as 45. And that comes from a very simple tool. Don't overthink it. Just put the tool on the chart and watch and wait for the market to react to these levels. And the traders are always asking me, how do we get the levels ahead of time? In this case, how do we know when these are going to be support and resistance levels? And there's a couple of ways of doing it. But one of the things I will show you today that I like to do, if we're looking about this range from here to here, quite often the markets will have a retracement and then repeat that first range. So what we can simply do is just grab this tool now, and we can lock that onto that low that occurred through here in September 2022, and then just drag that across to the right-hand side. And what you'll notice here in doing that, if we zoom in and let's just stretch it out a little bit, you'll notice that the levels that were important on that run up are becoming support and resistance levels in the next campaign up. And for example, at the 50% level, you can see that the market ran up and then it's come back and sat on it, moved up, come back and sat on it, and get good support around 38 and continued its rally all the way up to 45. It also tells me that if the Dow gets to 47.25 or 47.5, to watch for what could be a significant reversal. Again, don't overthink it. We're just using these levels as support and resistance if the market reacts to them at some point in the future. So I hope that makes sense. And of course, any questions or queries, you're welcome to send them through. See you again next week with another look at this fabulous Fibonacci technique in trading. Bye for now.